The world changed. That's how Craig Irwin of Roth MKM kicked off his latest Tesla note, upgrading the stock to a buy, raising his price target to 380. We want to bring in Craig right now, joining us now. Craig, I got to tell you, and be honest, this note pretty much caught me by surprise given our past conversations. So lay out this bull case for me and why you see Tesla or the catalyst that you see ahead for Tesla stock.
Yeah, we're always reevaluating, always looking at our assumptions, and you know what? The world did change. So this quarter, I think, is going to be the last quarter where we see a relative weakness for Tesla. I don't think the analyst pool listened all that carefully to the CFO's commentary around margins, his guidance around margins. We think that came from drop in battery prices that helped them last quarter. And now we have to factor in the election. So I think the pool of enthusiasts basically doubled, right? I mean, you may have some extreme liberals that want to get rid of their Teslas, but I think a lot of people are looking at Tesla going, wow, Musk's a pretty cool guy. Let's go check this thing out. And I think you have a reacceleration of sales in North America. And I think you see Tesla's market share start to rise back above 50% pretty quickly. So that means we have positive earnings revisions out of the sell side coming out of this quarter. They haven't had that for close to 2 years now. And then, there's an abundant list of catalysts on the positive side. On the negative side, there's really not much. The only thing you can do is point to the relative valuation versus the rest of the automotive industry. And that doesn't give them credit for what they're doing on AI and robotics and obviously FSD and the cyber taxi or ADAS. So, when we step back and reassess, the catalysts are there for this to continue probably for the next couple of years. And, that means the right rating here is buy.
What type of new sales realization do you believe would be applicable to Tesla if we were to see the rollback of some of the incentives for purchasing electric vehicles?
Yeah, so it's widely expected now that the Trump administration will roll back the $7,500 a car. Now, we've already seen the mainline automotive OEMs retreating from the EV market. Many of them have been losing too much money. They had badly positioned vehicles. We're developing vehicles for the wrong area of the market, things that were far too expensive or not practical for what consumers really want. I think that retreat continues to happen, obviously accelerate, without the subsidies there, because those are heavily subsidy dependent. I think Tesla probably will put through positive price instead of negative price. So, that's another U-turn in the stock to offset that $7,500 credit. They've shown that they can do that. And, that means that, we'll see the market concentrate back to Tesla. And I think, EVs are an awesome product. I drove an EV myself for a couple of years. There's a far greater implementation of technology there. I think consumers, that like technology, like EVs, and we will see a pool continue to grow in North America. The total growth rate might not be what the total market growth rate would have been, but I think Tesla gains market share and probably does have a pretty attractive growth rate. I think their 20% guide for this coming year is looking a lot more achievable.